Your top pick for us when we're talking emerging markets, it's India, specifically the NDIA ETF. India, in this case, underperforming the U.S. just by about 1%. What makes India so attractive right now in your mind?
Sure. Thanks for having me, Frank. Well, I think India is probably the best structural story in the world right now. And this is looking at a long-term 5 to 10-year horizon. Near term, we have catalysts in the form of the prime minister reelection. Modi's looking at a third term, signaling fiscal and economic continuity. And then bigger picture, India benefits from an amazing demographic backdrop, largest population in the world, largest youth population in the world, average age of 28, broadly very well educated. And you have a democratically elected government system supporting foreign direct investment, taking advantage of this moment in time where multinational companies are looking for supply chain diversification out of China. And you have a really strong combination of government spending, pickup in consumer spending, really reaching its inflection point where we start seeing a big boost to discretionary spending. And in addition to that,
and you say the elections in India actually make it more attractive to invest in right now? You're saying it's 950 million people eligible. That actually makes it a more attractive area of investment, the fact that they're having these large democratic elections?
Absolutely. So I think a lot of people are comparing India to China and are really getting a bit of comfort knowing that India is coming from a democratically elected political system rather than in China where it's sort of CCP's way or the highway. And that leads to a lot of sort of black box views in terms of what's going to happen beyond 6 months in terms of China's economic policies. But in India, we know what election pillars this government is running on. We know where they've delivered over the past 2 terms, and we know what their goals are over the next few years.
All right, so you're also looking at Brazil. This one's interesting. According to the BRAZ ETF, Brazil's down 9% on the year. And I was actually looking. Biggest export is soybeans. Soybean prices have been under quite a bit of pressure, and it seems like the economy moves with the soybeans.
I think Brazil, Brazil used to be sort of a China beta play. It used to be just about iron ore and, how many cities China is building and sort of industrial output from there. Brazil's done a fantastic job in terms of diversifying its economy, and mainly in terms of exports. By 2030 now, it's going to be the 4th largest producer of energy in the world. So right up with the bigger OPEC countries. And in addition to that, as you mentioned, soybeans, but it's agriculture, broadly speaking, which are really helping diversify Brazil's economy, which has really helped Brazil do well during a difficult period. You mentioned earlier into the introduction of this segment, monetary policy. So Brazil has had this history of hyperinflation. As we came out of COVID, they hiked interest rates from 2% to 13.75%. So a really massive hike, choked off inflation, but still were able to let growth come through, letting Brazilian GDP grow 2% plus a year. And a lot of that was because of the diversification.
Before we let you go, one more area to look at. One more area to look at. You're actually bullish on China. I said one more area to look at. You're actually bullish on China. Just a short time ago, you told me investors didn't like China because of the communist regime, but you think there's some upside there? Is that just it bouncing off the bottom, or is there some other reason?
No, so I'm not broadly bullish on China for the whole market, but I think within it, there's an interesting contrarian play in terms of China consumer. China consumer names are trading 50% below their historical averages. And this is one area of the economy that's really well aligned with the CCP's goals of doubling the middle class by 2035 and pushing growth through common prosperity. So breaking it down, I like China's consumer as a contrarian play, India as a structural play, and Brazil as a cyclical play.